Last week, Federal Reserve Chairman Jerome Powell appeared twice in front of US politicians to discuss the current state of the economy and the Fed's monetary policy. What Jerome said caused the stock market and the crypto market to crash, once again underscoring just how much of an influence the Fed has on the global economy. Today, I'm going to give you a bit of background about Jerome Powell and the Federal Reserve, break down what was said during the two hearings last week, and what it could all mean for cryptocurrency. Before I talk about the Fed, I need to make sure you're not being misled. So, if you came here looking for financial advice, I'm afraid you've hit a dead end. The only thing you'll find on this channel is educational content that will help you get ahead. Please contact a financial advisor if your bank balance is filling you with dread. Now, if this is your first time in this vicinity, my name is Guy and my mission is crypto accessibility. To that end, I create high-quality content to help increase your crypto abilities. Coins, tokens, news, reviews, and more, all explained with simplicity. If you're looking for videos with real-world utility, subscribing to the channel and pinging that notification bell is your responsibility. If you're in a rush or just have things to do, I've left timestamps below just for you. Feel free to use them to skip around or stay until the end to help this video get found. That's it for my debut. Let's see what Jerome has said and why it has markets feeling blue. If you have no idea who Jerome Powell is or why he matters, well, allow me to explain. Jerome Powell is the chairman of the Federal Reserve, which is the central bank of the United States. The Federal Reserve is supposed to do two things: ensure price stability and maximum employment. Now, obviously, these mandates are quite vague, which is why the Federal Reserve has specified both. Now, as far as the Fed is concerned, price stability means keeping inflation at around 2% per year, and maximum employment means around 4% unemployment. Note that unemployment refers to people who are actively looking for work but can't find any. It doesn't include people who aren't looking for work for whatever reason. Keep this in mind for later. Now, the way the Federal Reserve achieves its two mandates is primarily by raising or lowering interest rates. Raising interest rates makes borrowing more expensive and saving more attractive. The result is that people spend less, and this tends to lower the prices of, well, just about everything, thereby reducing inflation. If interest rates are kept too high for too long, however, this massive reduction in spending leads to job losses, which compromises the Federal Reserve's second mandate of maximum employment. Conversely, lowering interest rates makes borrowing cheaper and saving less attractive. The result is that people spend more and companies borrow to invest more. This tends to create new jobs, thereby increasing employment. If interest rates are kept too low for too long, however, this massive increase in spending leads to very high prices for everything, which compromises the Fed's first mandate of price stability. As you might have guessed from all the inflation we've been seeing, the Fed has kept interest rates at slightly above zero since the start of the pandemic. This incentivized individuals and institutions to borrow beyond their means, and the United States government also sent out trillions of dollars of stimulus money to citizens for them to spend. Inflation in the United States has hit record highs as a result, and though the Fed's monetary policy is not the only factor affecting inflation these days, it has arguably done most of the damage. Federal Reserve Chairman Jerome Powell is aware of this, and he's been dealt the difficult task of taming inflation by raising interest rates without causing everyone to default on their record levels of debt. This is the same position Jerome was in when I covered his confirmation hearing in January, and you can find out what he said back then by using the link in the description. Today, Jerome finds himself in an even more precarious situation than before, and that's primarily because of the Russian invasion of Ukraine, which has caused the costs of energy and fuel to skyrocket. Besides the fact that raising or lowering interest rates won't fix any energy or food shortages, the Russian-Ukrainian conflict could escalate into a global conflict of some kind, be it a war or otherwise. This means that the Federal Reserve must be ready to drop interest rates at a moment's notice to help fund any related operations actions or retaliation from the United States. At the same time, the Fed needs to be ready to aggressively raise interest rates if inflation in the country becomes unsustainable. This is because the US dollar is the world's reserve currency, and that means any inflation in the United States has a ripple effect around the world, especially in foreign countries that use the US dollar as their national currencies. The worst-case scenario in this regard is the hyperinflation of the US dollar, which would probably lead to an economic collapse and end the dollar's status as the world's reserve currency. Now, I'll quickly note that hyperinflation is psychological rather than economic. A currency only loses its value at an exponential rate when people lose faith in that currency. Anyways, if all of this wasn't bad enough, Jerome Powell is still technically waiting to be confirmed as Fed chairman because US politicians can't agree on the other nominees to the Fed's Board of Governors. For context, the Federal Reserve Board consists of 7 seats, and only 4 of these have been filled so far. The reason why the rest haven't been filled is basically because some politicians insist on having board members who will use the Federal Reserve's powers to do things that aren't part of its mandate, like fight climate change, address income inequality, and create a central bank digital currency, or CBDC. Now, you can learn more about what the Federal Reserve's digital dollar could look like by watching my video about that using the link in the description. I digress. As I mentioned in the introduction, Jerome Powell testified twice about the current state of the economy and the Federal Reserve's monetary policy. The first testimony took place on Wednesday, and it was for the United States House Committee on Financial Services, which oversees the financial services industry. The second testimony took place on Thursday, and it was for the United States Senate Committee on Banking, Housing, and Urban Affairs, which also oversees the financial services industry. Both committees are bipartisan, which means they had politicians from both major political parties. Now, there was quite a bit of overlap between the questions asked during both hearings, and I've cut out these redundancies for the sake of time and both of our sanities. As always, I'll give you my thoughts as we go along, should any thoughts arise, of course. So, Jerome Powell's first hearing started, as they always do, with opening statements from the top politicians from the committee on both sides of the aisle, and Papa Powell himself. The first to go was House Representative Maxine Waters, who started by recognizing that inflation is a problem, but that the high prices of some assets, such as houses, are high due to a lack of supply. Maxine then took a sharp turn by saying that the massive increase in the money supply has nothing to do with inflation and called central bank digital currencies a better alternative to cryptocurrency. Yikes. Next up was House Representative Patrick McHenry, who likewise lamented high inflation and identified the Fed's monetary policy and the opposition party's reckless spending as the root causes. Patrick finished by saying he's concerned that, quote, the same thing that happened in Canada could happen in the United States, a reference to how the bank accounts of people protesting pandemic restrictions were frozen. House Representative Jim Himes then chimed in with an astute observation that the main reason why the current sanctions against Russia are working is because of the dollar's status as the world's reserve currency. Jim also stated that he hopes the United States can benefit from crypto while preventing Russia from circumventing dollar-based sanctions, a concern that seems to be held by just a handful of politicians. House Representative Andy Barr was next to take the mic, and he blasted opposition politicians for their reckless spending before berating the Fed for its own mediocre monetary policy. Then it was time for Jerome to take the stand, and he began by acknowledging that the situation between Russia and Ukraine is uncertain, and the Federal Reserve is closely monitoring its potential effects. Jerome then went on to say that a substantial amount of inflation is coming from supply chain shortages, but that the Fed intends to raise interest rates regardless, so long as nothing unexpected comes up. Then the questions began, and House Representative Maxine Waters was the first to go. She asked Jerome how politicians could address the supply shortage of some goods in the country. Jerome's reply implied that a lot of the demand we're seeing for certain goods is coming from panic buying, and he seems to have a point there. If you know that something is going to be more expensive tomorrow because of inflation, then the logical thing to do is to buy as much of it as you can today so as not to spend more tomorrow. Maxine then mentioned something I've heard before, and that's that there is a shortage of housing in the United States. Lo and behold, the US seems to be short around 5 million homes, and Jerome says that this has partly to do with investors buying properties with low interest rate loans, partly because of a labour shortage in that sector, and partly because of the high cost of materials to build a house. House Representative Patrick McHenry was next to take a swing, and he asked Jerome point blank about what the Federal Reserve is planning to do in terms of interest rates going forward. Jerome began by admitting that it was ready to raise interest rates aggressively until Russia invaded Ukraine, but now things are looking highly uncertain on the interest rate front. Even so, the Federal Reserve plans to raise rates by 0.25% by the end of the month. Patrick then pressed Jerome about whether 0.25% was the maximum or minimum the Federal Reserve envisions, and Jerome said that it all depends on whether inflation begins to decline. If it does, then it won't raise it anymore anytime soon, but if it doesn't, then it will continue increasing interest rates. By the way, I covered this in a lot more detail in my video on conflict and crypto, so feel free to watch that one after this if you want further context. That's in the top right. House Representative Juan Vargas kept the tension high with his own line of questioning, which centered around cryptocurrency and CBDCs, specifically in the context of sanctions, and specifically whether they can be used by foreign governments to evade US sanctions. Jerome replied by saying that he doesn't know whether cryptocurrency could be used to evade sanctions and stated that more regulation is required on that front regardless. When asked whether CBDCs would help with sanctions, Jerome stated that it's not clear whether the benefits of a CBDC outweigh the risks, and even if they do, sanctions might not work too well with CBDCs, which is a surprising statement to say the least. If you're wondering why, you can check out my other video about CBDCs using the link in the description. Anyhow, after some tense exchanges with House Representatives Michael St. Nicholas and Barry Loudermilk about the Federal Reserve's actions and ability regarding inflation, Representative Jesus Garcia asked Jerome how raising interest rates will reduce inflation. This is because Jesus seems to believe that inflation is being caused by greedy corporations looking for an excuse to raise prices rather than monetary or fiscal policy, and you'd be surprised at how many US politicians seem to believe this. Jerome, who was visibly trying to contain his shock, calmly replied by saying that keeping interest rates low for too long incentivizes borrowing and leads to too much spending, which raises prices. House Representative David Kustoff created a contrast with his questions, which focused on the unreliability of the Consumer Price Index, or CPI, that's used to measure inflation. As I mentioned in my video about the CPI, the makeup of the measure has been adjusted many times over the years to the point that the 1980s version of the CPI shows twice as much inflation as the current iteration. David then asked Jerome about whether US banks could survive a cyber attack, and the room went dead silent. Jerome replied by saying that it's, quote, hard to say what's possible, but they're actively monitoring risks of a cyber attack with US banks. A concerning response, no doubt. House Representative Carolyn Maloney then turned the tension meter up to 11 by asking Jerome about the trend of countries such as Russia and China moving away from the dollar and what effects this could have on its status as the world's reserve currency. Jerome's reply made the headlines, and that's because he said that it's possible to have more than one reserve currency, which effectively confirms that the US dollar's days are numbered. I'll also note that Jerome looked visibly nervous when answering this question, and he's not a nervous guy. House Representative Frank Lucas kept the heat high with his questions about whether the sanctions on Russia's banks could have any effect on the United States. Jerome admitted that there could very well be unintended consequences, and though no US institutions have significant exposure to Russian institutions, there could be second-order effects arising from, say, a European bank that goes under because of Russian sanctions. After a few irrelevant questions from House Representatives Nadia Velasquez and Pete Sessions, Representative David Scott used his time slot to make some sobering statements about what effects the conflicts between Russia and Ukraine could have on the world's food supply. To be blunt, he said that the world is likely on the verge of a hunger crisis, and that Russia alone produces 2/3 of the fertilizer used in food production, and that Russia and Ukraine are some of the world's largest exporters of corn, wheat, and barley. Scott desperately asked Jerome whether the Federal Reserve could do anything about this, and of course, the answer is sadly no. Following a few more meaningless questions from House Representatives Bill Posey and Ed Perlmutter, Representative Warren Davidson put Jerome to the test by asking him whether the US dollar was sound money. Jerome said yes, but the real answer is no, because the definition of sound money is a currency that doesn't lose its purchasing power over the long term, and, well, you can see here what the US dollar has done. Ed also asked about all the intense pressure around ESG that financial institutions are facing, but his time ran out before Jerome could reply. I, for one, would have loved to hear that discussion, and you can find out why by watching my video about ESG using the link in the description. Now, back to the hearing. The next House representative to tango with Jerome was Bill Foster, the infamous anti-crypto politician who famously said that the US government should have the power to reverse Bitcoin transactions. To my surprise, Bill didn't ask Jerome about cryptocurrency and instead asked him for a detailed timeline for how long the Fed plans to raise interest rates for. Jerome said these plans have yet to be hammered out, but they're probably looking at gradually raising interest rates over the next 3 years. House Representative Blaine Luetkemeyer took his turn to hit Jerome with some pretty crazy inflation statistics stated by an economist who had recently testified to the committee about inflation. According to this economist, 40% of inflation is caused by an increase in the money supply, 20% is caused by regulations which restrict supply, 20% is caused by supply chain issues, and 20% is caused by energy prices. Blaine concluded that this means politicians are ultimately to blame for inflation, even though the Federal Reserve's actions account for the biggest slice of the pie, and I reckon that sounds about right. After a few yawn-inducing questions from House Representatives Bill Lawson, Bill Huizenga, and Sean Casten, Representative Andy Barr asked Jerome when the first interest rate increase will be, and Jerome said 2 weeks. Given that Jerome testified last week, this means we will see the first interest rate hike next week, so get ready for some volatility. House Representative Stephen Lynch then resurrected the terrifying question of whether the United States financial system would survive a cyber attack from Russia as a response to its banks being cut out of the SWIFT payment system, and Jerome said he doesn't know. Very reassuring. House Representative Roger Williams raised a similarly terrifying question, which began with the fact that the Federal Reserve has never managed to raise interest rates without crashing asset markets, and ended with the request for an explanation as to how Jerome and co. will be able to secure a soft landing. Jerome nervously stated that they're going to move very carefully, and they're going to choose their words wisely because they know that even just saying they're going to raise interest rates is enough to cause a market dip. Jerome also specified that there will be fewer than 8 rate hikes, which means that interest rates are unlikely to rise past 2%, and the Federal Reserve's historical interest rates suggest they won't raise further than 1.5% before something breaks. House Representative Richie Torres took the discussion to another level when he asked Jerome point-blank about whether stablecoins like USDT and USDC could be used to help the dollar compete against other national currencies, to which Jerome said yes, so long as they're well regulated. This is something other politicians have raised in previous hearings related to cryptocurrency, and why I personally believe we won't be seeing a stablecoin ban anytime soon, at least not from the United States. Richie also asked Jerome about how big a risk stagflation is, and Jerome simply responded that, quote, there are no guarantees. Now, you can learn more about what stagflation is and why it's one of my biggest fears by using the link in the description. Anywho, after a few redundant questions from House Representatives French Hill, Alma Adams, and Anthony Gonzalez, Jerome revealed a few juicy details about the Fed's interest rate roadmap when he was questioned by Representative Madeleine Dean. Jerome said that the Federal Reserve will raise interest rates by 0.25% about every 7 weeks, which will apparently be twice as fast as the last time the Fed decided to raise rates. When asked about what effect this will have on asset prices, Jerome confirmed the common-sense deduction that all borrowing rates will go up, which should lead to a decrease in housing prices and car prices. When asked about whether corporations are contributing to inflation, Jerome explained that while industry consolidation does tend to reduce prices, the kind of inflation we're seeing is being caused by unprecedented macroeconomic factors such as the pandemic and now the war. House Representatives Alex Mooney and Sylvia Garcia finished off the hearing with questions about how inflation is affecting regular people, and Jerome's responses were pretty depressing. When asked about who inflation is hurting the most, Jerome's answer was retirees and the elderly, who rely on pension money and savings that are losing value by the day. When asked about whether housing costs will ever go back below pre-pandemic levels, Jerome's answer was a firm no. Ouch. Now, if you're subscribing to my weekly newsletter, you'll know that Jerome Powell's first hearing coincidentally coincided with the exact time when the crypto market and stock market started to dip. However, it wasn't until the second hearing that cryptos and stocks started to crash. So, let's take a look at what he said then, shall we? As I mentioned earlier, Jerome Powell's second testimony took place in front of the United States Senate, and this hearing also began with opening statements from both sides of the aisle. The first senator to step up to the plate was Sherrod Brown, and he bragged about how well the US economy is doing, before blaming all the inflation on greedy corporations. He even stated that the pending Federal Reserve nominees need to be approved immediately so they can print more money to address issues that are far outside the Federal Reserve's mandate. Next up was Senator Pat Toomey, who expressed concerns that some Federal Reserve banks have started to become political and are allegedly doing things such as promoting the defunding of police, all the while rejecting requests for any information about what exactly they're up to. Pat practically begged Jerome to make sure the Federal Reserve remains apolitical. Jerome then repeated the same opening statement as the day before, and the question period began with the two senators I just discussed. Sherrod started with a question about how ready the US banking system is for a cyber attack, and all Jerome could say is that they're all on high alert. Sherrod then asked about what effect inflation will have on the economy, and Jerome said that people will probably stop investing in risky assets. Naturally, this could have some serious implications for cryptocurrency. Once Sherrod finished shilling for more money printing, Pat prodded Jerome about how Russia's invasion of Ukraine has influenced the Federal Reserve's approach to inflation. Jerome repeated what he said the day before, namely that it's taken a more cautious approach, but this time he added a bit about not wanting to add to any uncertainty in the market. Now, call me crazy, but I suspect Jerome said this because of the effects his comments had on the markets the day before. After Senator John Tester tested Jerome about how much of an impact corporations are having on inflation, Senator Richard Shelby asked Jerome if he's ready to raise interest rates, quote, like Volcker did, in response to inflation. For those who don't know, Paul Volcker was the chairman of the Federal Reserve in the late 1970s and 1980s, when the United States was experiencing the same sort of inflation it's seeing today. Paul is famous for raising interest rates to 20% to bring inflation back under control. Jerome's response is probably what caused the crypto and stock markets to crash, and that's because he said yes, meaning Jerome is ready to raise interest rates into double-digit territory if need be. Now, I find this very hard to believe, but I'll take him at his word. After a couple of questions from Senators Bob Menendez, Mike Crapo, Mark Warner, and Tim Scott that were asked the day before, Senator Elizabeth Warren got her 5 minutes of fame, and Committee Chairman Sherrod Brown nearly covered his face as she started to speak, despite them being politically aligned. Now, this is because Elizabeth is nauseatingly anti-crypto, and she's also the only politician who voted against Jerome's nomination in 2018, so they're not exactly on each other's Christmas card lists. As expected, Elizabeth didn't really ask any questions and spent most of her time ranting and raving about how corporations are causing inflation and how Russia is evading sanctions using cryptocurrency. She even slammed cryptocurrency exchanges for refusing to sanction regular Russians. All Jerome could say was that this isn't his area of expertise and that Elizabeth should take up her concerns with Treasury Secretary Janet Yellen. Now, on that note, you should know that the Federal Reserve, Treasury Department, and other regulators have been drafting regulatory recommendations about cryptocurrency for US politicians, and you can find out what's in their playbook by using the link in the description. Now, where was I? Yes, Senator Jerry Moran. This fellow flung a question at Jerome about how the Federal Reserve is watching inflation, and Jerome said that it's not paying too much attention to the CPI. Instead, it's looking at another indicator called the Personal Consumption Expenditures, or PCE. Now, as far as I understand, the PCE is essentially like the CPI, except it omits energy and food, which are conveniently the two things which have experienced the most inflation over the last year. As far as Jerome's concerned, this is fine because energy and food are too volatile to be included in inflation. After a few fleeting questions by Senator Tina Smith, Senator Steve Daines managed to hit the mark with his question about how much oil prices are influencing inflation. Jerome said that a $10 increase in the price of oil corresponds to, quote, 2/10 of inflation, and I imagine he meant 2/10 of 1% of inflation, so 0.2%. Now, if my interpretation is correct, this means we could see double-digit inflation if the price of oil continues to climb. Daines, realizing he'd secured a quantitative answer to a question, pressed Jerome about how much of an effect the Federal Reserve's offloading of assets could have on inflation in percentage terms. In case you missed the memo, the Federal Reserve has amassed trillions of dollars of US government debt, and any selling of this debt will raise interest rates for reasons that I won't get into here. Jerome tacitly admitted that selling $500 billion of government bonds would correspond to a 0.5% increase in interest rates, though this very much depends on other market factors. Hungry for a hat trick, Daines dared to ask Jerome about whether we were on the cusp of hyperinflation, and Jerome repeated the aforementioned fact that hyperinflation has more to do with psychology than the economy. Senator Chris Van Hollen brought Jerome back to his happy place by asking whether the Federal Reserve was ready to unleash the money printer the same way it did at the start of the pandemic, should a new variant arise, and Jerome cautiously responded in the affirmative. When Van Hollen tried to hit a home run of his own by asking Jerome about whether wages had increased in real terms last year, Jerome shut him down by explaining that aggregate wages had actually declined in 2021, something that's well known to anyone who works a regular job. After Senators John Kennedy, John Ossoff, Bill Hagerty, Catherine Masto, Tom Tillis, and Raphael Warnock all failed to convince Jerome to play politics, Senator Mike Rounds asked Jerome whether raising interest rates would affect the government's abilities to pay back its debts. Jerome danced around the question because the answer is obviously yes, and you can learn about just how bad government debt has gotten by watching my video about it using the link in the description. The last two senators to interrogate Jerome were Jack Reed and Kristen Sinema, and it's safe to say that they wrapped up the hearing with some incredible inquiries. That's because Jack addressed the elephant in the room, and that's that the housing supply crunch and the resulting runaway prices are allegedly due to Wall Street firms buying up all the single-family homes using money from the Federal Reserve. Jack even evoked an unexpected response from Jerome regarding the global trend away from the dollar, specifically that some superpowers have accelerated their abandonment of the dollar in the wake of the Russia-Ukraine war, probably because they saw that central bank assets are fair game for sanctions. Kristen confirmed that US politicians are starting to become concerned that their sanctions against Russia are doing more harm than good to the dollar, and Jerome essentially said that the damage to the dollar depends on how long this situation lasts. Note that you can keep up with the latest updates about macro factors affecting the crypto market by watching my weekly crypto reviews, and you can find the latest episode in the description. And now for the big question. What does all this mean for crypto? Well, in short, it's a double-edged sword. On one edge, the Federal Reserve is definitely looking to raise interest rates to not just fight inflation, but preserve the dollar's stability and legitimacy. This could result in a nasty cut for the crypto market as investors flee from risk-on assets to risk-off alternatives that earn yield, such as government debt. On the other hand, it's clear that the Fed has found itself in a corner that it can't easily get out of, and as much as it's avoided becoming politicized, politicians have shown no scruples in using the dollar as a political weapon against international opponents. Now, the international community has known this for quite some time, and many of them have been trying to move off the dollar for years. From where I'm standing, there's no question that the current conflict has accelerated this process. This edge benefits crypto because it can be used to cut through the corrupt and fragile fiat financial system that seems to be crumbling before our eyes. Some countries, such as El Salvador, have realized that fiat currencies are futile and have turned to adopting currencies that aren't controlled by any country, currencies that maintain their value and can't be turned off for any reason. In sum, Jerome Powell's 2 testimonies prove that time is running out for fiat currencies, and we are at the beginning of what is likely to be a very volatile trend towards the decentralization of national currencies in some way, shape, or form. All I hope is that we end up with cryptocurrencies and not CBDCs. And that's all for today's video about Jerome Powell's testimonies. If you found it informative, let me know by giving that like button a click. Remember to subscribe to the channel too and ping that notification bell so you don't miss the next vid. If you're looking for more to do, boy, have I got the resources for you. Coin Bureau clips for behind-the-scenes footage and original flicks. My podcast with iHeartRadio that covers crypto stuff you need to know. Twitter, TikTok, and Instagram for dank memes and daily rants. Telegram for crypto market updates that your portfolio demands. And a weekly newsletter where I reveal my master plans. If you want to support the channel, you can cop something from the Coin Bureau merch store, and you can find your way to all these resources using the links down below. Thanks for watching, everyone. I'll see you all in the next one.